Amazon is up 50% year to date. I'm going to tell you exactly why it's up 50% year to date, purely because of hype. Guys, in the short run, stocks are a voting machine. In the long run, they're a weighing machine. If a stock goes up 50% or down 50% in such a short period of time, the vast majority of the time, it's because of momentum. In the short run, when a stock is up a ton, it's because a lot of people love it. When it's down a ton, it's because a lot of people hate it. But here, the next thing we're going to do in this video is to explain to you the long-term fundamentals of Amazon and what price you should pay. Remember, don't make your reaction, don't make your buy or sell based on short-term price movement. Price and value are different. We're here to explain that. Mo, what do you think?
Or short-term news.
Or short-term news. Guys, it's really easy that when you have a company and you see news, you think to yourself, this is going to affect the long term of the business. I get that. I've been there. I had to program myself over years to realize it's not, usually the information is not going to affect the long term. Does it happen? Of course it does. But of course, people now are saying, look what's going on in Israel, look what's going on in Russia and Ukraine. World War III is starting. Guys, we've heard the World War III talk how many times in the last? Incredible, right, Mo?
Yeah. And to me, I haven't paid a lot of attention to Amazon this year, as funny as that sounds. But if I look at and you say it's gone up 50%, my first thought is AI hype.
Yeah.
I'm
Just
guessing
overall,
that something happened where they said AI and people are flocking to it.
Well, not only that, though, the hype around the markets in general get people to go buy a company that's up a ton and say, oh, it's back again. Yeah. We have a new bull market. Right. So Amazon's a $1.34 trillion business that did $538 billion in revenue. Now, guys, on that $538 billion in revenue, only $13 billion in profit, and that's lower than their 5-year average of $16 billion.
That is mind-blowing.
And here's what I don't like, Mo. Look at their free cash flow. 3.2 last year versus 6. Now, with that said,
they do reinvest a lot.
That's the big thing. So don't get as affected here about the free cash flow. Look at Amazon. We go to our cash flow statement. And the one thing we do in our software is we actually added the free cash flow line here. Look at these capital expenditures, because free cash flow is cash from your operations less your capital expenditures. Let's focus on this part. Cash from operations. Look at its growth over the last 10 years. Absolutely incredible. 5 billion, 9 billion, 13 billion, 18, 22, 36, 51, 59, 36, 62 billion dollars. Free cash flow is important. But when they're investing a ton, like a company like Amazon does, that's what I love about Jeff Bezos and the people at Amazon. They're very long-term oriented. But at some point, you got to start asking the question, where's the cash? Just like, where's the beef that Wendy's used to say in 1984? Where's the cash? At some point, at $584 billion in revenue, you got to start seeing some sort of profit there. So, does Amazon pay dividend? No, and I love that. Mo, are they buying back shares?
Let's check. I would venture to say no, but
I hope not. They are not buying back shares. In the last 5 years, their shares are up 5.8%. This is their 8 pillars, guys. Remember, 8 pillars tells a story. Don't just ignore a company that only has 2 check marks. You have to sit there and figure, and look at this other one. Free cash flow is down a lot. Yeah, we just went over why. Their capital expenditures are huge right now. They reinvest back into the business. I just had a conversation last night with a good friend of Mo and I, and he's got a wonderful YouTube channel. And he talked to me about a book that said Profit First was the name of the book. And the guy says in the book, focus on what's profit you want to make, and that should affect your expenses. I disagree. And I think one of the great things that Amazon does is they don't worry about profit first. Yeah. They worry about how do we make our business a bigger moat. And that's what I love. Now, I will say this one thing that's a little confusing. The gross profit on Amazon is showing 14.2%. A lot of people would argue this is inaccurate. I don't know if it is. You know, you have a company like Walmart, and Walmart has 25%. So you sit there and think to yourself, how could Amazon have a lower gross margin than Walmart? Right. I mean, that's a logical question, isn't it, Mo?
Yeah, absolutely.
I mean, Walmart's brick and mortar.
Exactly. It's a very different business.
They don't have AWS like Amazon. AWS is Amazon Web Services, which is a very high margin business, and they're the dominant force in that area.
It's their main source of profitability.
Yeah.
By far.
But it really drives down these profit numbers.
Yes, it does.
Really drives down this free cash flow. And by the way, that's the profit margin at $13 billion. Their free cash flow is $3 billion on $538 billion. Oh man, that's tough. But again, they're long-term oriented thinkers. They're all about how can we invest our money today to get more profit down the road. Now, with that said, Amazon Prime blows in terms of the streaming.
Oh, the streaming's terrible.
Yeah, the streaming is absolutely awful.
They're streaming. Have you ever used Amazon Music?
No, I never have.
It's not that good. I mean, it's fine, but it's not that good. So like all of these little projects, they're not very good.
Yeah, they had that phone for a while, the
Yeah.
Fire phone or whatever it
They had
was.
the
That was a
Fire
flop.
tablet. The Alexa, I like Alexa.
Yeah, Alexa's not bad.
Yeah.
But I'd still rather have Siri and
Oh,
the
really?
Amazon Echo. Is it called
Yeah,
the Echo?
Amazon Echo, the little dot
Sorry.
thing.
The Apple, what's the
Oh,
Apple thing called?
HomePod.
HomePod.
Gotcha. Yeah.
Yeah, I'm just an Apple person, I guess, in that regard. Like even Google, which I love Google as a company, I don't know. So you look at these PEs, 102, 84. Look at their price to free cash flow, 416, 226.
Yeah.
Whew.
Yeah.
Guys, at a $538 billion company, let's triple their profit. This 102 goes down to 34 PE if you triple their profit. Is that a reasonable amount? I don't know. Why? Because we've never seen a stabilized, free cash flowing, non-reinvestment business through Amazon.
Tough one.
It is a tough one.
Outside of them just being Amazon and really cool and really awesome.
They incorporated it on my birthday.
Really?
I think it was July 5th, 1997, 4, something like that,
Nice.
on my birthday. Another thing that happened on my birthday, Seinfeld debuted in July 5th, 1989.
No kidding.
Yeah.
Did not know that.
Well,
You know a lot of facts about your birthday.
there's also a porn star that shares my birthday.
Ooh.
I don't know her name. I have no idea. But my exact birthday, July 5th, 1981.
That's funny.
All right. So, Mo, what do we have in terms of bull and bear cases from our community? Guys, we go to our community a lot. We love our community. We sit there and say, guys, give us your bull and bear cases. And yeah, what is it?
Okay. So Zach Dar just put a bear case in
I
here.
love Zach.
I have yet to buy a single thing from Amazon.
Oh, Zach,
There's no way.
Zach, you're 25. How old is Zach?
There's-
24,
Yeah,
25?
there's no way.
He's never bought anything from Amazon.
I'm
What are you,
I'm
87?
going to have to respond to him on this one.
How has he never bought anything from Amazon?
Okay, let's see what Christian said. Amazon's new 100 million, here we go, generative AI program could boost their cloud business short term, but Microsoft's general AI tools embedded in all products could make the business more efficient. Okay, this is just a comparison between
Yeah.
a bunch of different companies.
I like Christian, by the way. He's
Yeah.
going to be one of our ambassadors.
I like that. Let's see. Amazon's advertising revenue in 2022, Amazon reported 37.75 billion. Wow. That is a lot.
Amazon, you might be wondering what's Amazon's advertising. Guys, you got to remember, over 50% of the products that are sold on Amazon are not Amazon products. They're third-party products. We have a company called Fit Active Sports. At one point, we had the #1 weightlifting glove on Amazon. What then we do is, just like Google, vendors will pay to get their you'll see on a sponsor, it'll say sponsored. So let's go to Amazon right now and I'll show you. So let's look something up. Mo, let's look up, what was the last thing you bought on Amazon?
A couple of dongles for USB-C dongles for the iPhone.
Okay, it's asking me to enter the letters below. Continue shopping. All right. Why does it say fake blood? Oh, I'm not signed in. That's why. Jeez, oh Pete.
Porn stars and fake blood.
Dongle for iPhone with aux cord.
Yeah.
Okay. Results.
There you go. Items shipped by Amazon.
Well, I want to show where sponsored is. Let's go back. So Amazon, that's what they do. They let vendors who sell on their site pay for ads just like Google. You pick keywords, you pop up, etc. That's their advertising business they're doing. Amazon has one of the this is a bull case of Amazon. They have a 25% purchase rate. 25% of the traffic that goes to Amazon will buy something right then and there. That's unheard of.
Wow.
A regular vendor, if you're getting 10%, you're killing it. Big time stuff, guys. I remember when I was in college reading an article about Amazon, they said they want to be able to sell everything, including washing machines. Like, who the hell is buying a washing machine from Amazon?
I feel like caskets there now.
Boy, was I wrong.
Yeah,
You
literally
can buy everything.
Like I'm looking at my thing right now. I have a lawnmower, a golf bag, a speaker, tools. Like I'm just looking at my phone right now and saying like, what is being shown to me? It's crazy. One other bull case that I wanted to show. Amazon Web Services has 30% of market share globally, when it comes to the cloud market, Microsoft is in second with 23%.
Can I say something?
So you can see the lead that they have.
Yeah, I actually thought Microsoft would have been much further behind, and Amazon would have much. I thought my Amazon was going to have like 60% share, and Microsoft was going to be at 15%.
Yeah.
So okay. Bear Case is being sued by the FTC for antitrust issues and calling for the company to be broken up. That is a legitimate concern. However, if you look at the history of FTC breaking up companies, especially tech ones in the last 25 years,
it's not very good.
No, it's not the best, but is it going to be a short-term problem? To me, if you like Amazon, you want to encourage this. That way the price gets pushed down further and further. Okay? Because those people at the FTC still love their Amazon. Okay.
I am messaging
Zach
Dar right now.
Unbelievable.
How this is possible.
I don't even understand how he's like literally a 24, 25-year-old kid.
Yeah.
He's never bought anything from Amazon.
Amazing.
Oh my gosh. Okay. So let's look at analyst estimates here. Oh, wow. Big growth here.
Yep.
So they're expecting $2.25 in profit this year, growing to $6.04 in the next 4 years. Now, I want everybody to remember, analysts have way more bias than even you do. They've got to be on par with all the people here who talk with them. By the way, these aren't the only analysts. These are the only analysts that we get on our data feed. There are hundreds of analysts covering Amazon.
Their jobs
and they
rely on this.
Correct. They want to be in the same group because herd mentality, and they have career risk. So just keep that in mind when you're looking at this. But this is some big growth. Now, with that said, the company is currently at $128 a share. That's 21 times 2027 earnings per share. So these investments start paying off. It's still 21 times 4 years from now. Let's look at revenue. Mo, look at this revenue growth.
Yeah, it's massive.
Double digit every single year, according to analysts.
Yeah.
580 to 887.
So you just said something interesting. You said if these investments pay off, they have been paying off for them, but they just keep going, and that's the thing.
But that's a good thing. I mean,
it's good, but it's also like, when are you going to stop acting like a
well, not only that, at some point,
$500 million company?
When you have $900 billion in revenue, how do you move that needle?
Yeah.
It's got to be big investments. And at some point, you got to sit there and say, we just can't make these big investments anymore. I don't think we're there yet.
Yeah.
But you've got to start sitting there. And I do think Amazon has a lot of major potential on their reinvestment dollars. All right. The next thing I want to do is I want to figure out what's the price to pay for Amazon. Mm-hmm. So that's why we have our stock analyzer tool. Now, guys, you've heard me talk a lot about our community, and you can see all of our software and our tools. And of course, I want you to join. But I want you to make an informed decision. I'm not asking you to make a decision right now. I'm asking you to make an informed decision. And what that means is the way to make an informed decision is being on the inside, getting in the community, having that conversation. You saw those bull and bear cases. There were a ton more than what we showed you. There's a lot of thousands of community members in here talking every single day about investments. You have all of these tools. So just like you want to buy a car, you take it for a 15-minute test drive. I want you to take our software for a test drive, except instead of 15 minutes, I'm offering you a 7-day full access free test drive. Just go to everythingmoney.com, sign up, full 7-day free access, go in the community, go to the general chat, tag me and say, Paul, I signed up for the free trial, and we'll welcome you, and everybody will be embracing our usage on the community is up 80% since last month. People are really engaging a ton. And the best part is, guys, it's a community. Today, the markets were down to start, and the excitement from people going, yeah, red day, we love it. So again, guys, everythingmoney.com, 7 days, full access free trial. Okay. So Mo, when was the last time you did Amazon in your...
At the beginning of August.
Mine was September 11th. Never forget.
Okay.
All right. What did you do for... Now, guys, I want to make a note here. I think this is a very misleading return on invested capital. I think it's much higher than this, but based on the way return on invested capital is calculated in our system and in most systems, on growing companies that reinvest, it's going to push down the ROIC below what it actually is. Mm-hmm. Okay? So what did you do for revenue growth, Mo, in low, middle, and high?
So I did 5, 7, and 9%.
Okay, I did 6, 10, and 14.
Wow. Okay.
Yeah, I did do that.
All right.
Okay, I'm going to give them a little bit of benefit of the doubt.
Yeah, I think that's good.
Profit margin.
I did 2, 5, and 7%.
Okay, so I did 4, 8, and 12.
Okay.
I think I'm going to go a little bit different, though. I think I'm going to go 4, 7, and 10.
All right.
And I'm going to do the same thing for free cash flow, because I think it could be a much more profitable business than Walmart, but still 7% is way higher than Walmart.
Definitely.
Because they have the AWS in there. Okay, so and people might say that, guys, the numbers are what they are. Look at this. My lowest numbers are still higher than they've done in the last 10 years. still higher than they've done in the last 10 years. So I want to make everybody remember that. Now for PE, guys, PE and price to free cash flow. What I always recommend is start at 15. If the return on invested capital, the growth rate in the mode is high, give a higher PE. If it's bad, give a lower PE. This one's hard because we see a low ROIC, which I think is a little misleading.
Right.
The growth rate is pretty decent, actually.
It is.
But the moat is it's huge.
No one's penetrating this.
It's going to be very difficult.
I would even argue if the FTC went in and broke them up, it would still be hard to penetrate them. Like if they broke them up and said, okay, now other companies, go compete with them. It's kind of the situation you say like Disney. Give somebody, what is it, 100 billion, 200 billion, go make a new Disney.
You're
See
not
how
doing
it goes.
Yeah.
You know what I mean?
Yeah, if we gave you, I swear, if you gave you somebody $1 trillion and said, go compete with Amazon, I think it'd be hard.
It would be very difficult.
So what'd you do for your PE? Because I'm going to change mine.
So I did 17, 20, and 23.
I have the same thing. I'm going to change mine.
What are you going to put?
17, 21, and 25. Okay, now what's your desired annual return, guys? This is basically your margin of safety. You can get 9 or 10% over long periods of time investing in a long-term ETF. So the question I ask you is, what return do you want? The higher your assumptions, the higher your desired return should be, because that drags the price down. It's more margin of safety. Mo, what'd you do?
So I did 11, 13, and 15.
I actually agree with you on that one. I did 12, 14, and 16, but I'm going to change mine to 11, 13, and 15. Now, guys, I'm going to hit the analyze button. Now, I just need you for just a smidge longer while Mo and I explain these numbers. It's really important. We're trying to teach you how to fish. We're not just trying to say, this is the price. We made our own assumptions. So let's check out the numbers below. Boom. I have a low price of 37, a high price of 160, and a middle price of 86. Mo, what'd you get?
I have a low price of 17, a high of 75, and a mid price of 48.
Okay, so guys,
my watch list is $75.
Very different pricing. I have it on my watch list of 75. I still feel comfortable with that because Amazon still needs to prove they can make big time money. So guys, again, 7-day free trial to our community and our software, everythingmoney.com. Check it out.